Eric Muathe at Muathe.com with another quick video. Just want to respond to a comment here about the 3 stocks I mentioned yesterday for the general subscriber base, ISLE. Now the one thing I want to show here is if you take a look at the monthly charts, and this is the key, we can already see that the monthly charts for ISLE is already giving us a major sell signal. Probably I don't have to show that they're moving to 3-year lows on the MACDs and the RSIs there, ISLE. Take a look at JP Morgan. On the monthly chart, continues to be bearish, 3-year lows on the RSIs and the MACDs. In fact, even you can see here the MACD moving below 50, suggesting a big down month. Of course, we don't know for sure. We can only go with where the momentum is pointing towards and ask questions later. USB, also here, you can see monthly RSIs and MACDs at 3-year lows. So the momentum on a month-to-month basis is down. And so the comment was that these stocks were already giving us early sell signals over the last week or so, and that is true, and I'll show you why. So once you figure out that the stock is, or the stocks are potentially going down, you go back to those monthly charts, for example, and so you can see that if you truly want to wait for the momentum to confirm again, we need to wait for them to break to recent lows here on the weekly chart. And the price is there, just for the sake of the purpose of making this video relevant, is 39.05 for USB. So you can use the weekly chart for that entry point. Really, you don't have to complicate this. The monthly already looks bearish. You can use this 39.05 for entry there. Take a look at JP Morgan. I guess let's go back to the weekly. So take a look at JPM. And I said the video would be short, it's already getting lengthy here. And you can see that this is the recent recent weekly closing low. And for JPM, just for the sake of showing this, it is 56.95, which happens to be this weekly closing high there. You can use that 56.95 for a trigger to the downside. If and when it recaptures back above 56.95, in other words, if it shows that it is holding above the recent weekly closing low for 2015, then you can close that position. So you can use this for reference. Below that, it's a short. If it recaptures back above 56.95, it is definitely one you can consider getting out. Now take a look at ISLE. I just want to share with you how we can use the weekly charts to narrow down on this instrument. You can see that the recent weekly closing low there, first week of February, was at 11.65. So 11.65, right? Okay. So below that, it's a sell. The monthly is already bearish. It's moving below 30.9 on its weekly. Lots of bearish things going on. But the key here, what I want to show you is that if you go back to the daily charts, all of these charts were giving us short-term sell signals based on the daily before the current drop on the weekly charts. So you could have got a chance of getting a short position in JP Morgan right there in the 59 area. Why? Because you can see that the RSI came back to test that level, which is a backtest level there, right, based on this break point there. So there was a sell signal. In fact, this is a double top here and here. Both of them touch that line twice, which means it's double important. And also you can also look at this from the other point of view, which is that, simply put, if you had come back and figured out where the actual break took place in late December, draw a line from there, which is our uniformity line, and there you have it. Bang! Double top resistance and rejection also on the red line, which also happens to be an area where we can clearly see that this is rejection at the 50 RSI level on the daily. So that's why I'm saying that if you use that uniformity principle for something that is already bearish, this was your entry price here in the 59, higher 58 level. And the same can be said for the other instruments. ISLE gave an earlier sell signal. Remember, the monthly chart was bearish. You can see here coming back and showing resistance at the declining 50-day moving average, touched it and coiled down. And also you can see that if you take a look at this break, let's take a look at how I store that. Give me a second here, change my tool. So there was a break. You can in fact, you know what, let's scratch that and draw a straight line from the lows, and I'm not sure it's gonna connect, but I think it might, right there. And you can see uniform action above the black line, back below it. That's a trap, which is right there. So you had a chance of getting this in the higher $12 area, or under 13, or even somewhere around there. So that's one view. I'm going to test something here. I haven't done this before the chart, but I can draw a straight line connecting RSI highs, and bang, it gave you a sell signal right there. It is also uniform activity rejection at the 50 RSI level. Lots of sell signals there. Resistance also coming to this break point right there. Let me remove that. So all these charts gave you short-term sell signals, because if you come back and draw this line here, so you follow this to where it began right there, you draw a line slightly below 50, you can see that it went above the red line and back below it with uniform activity, which makes that a trap. So around the $12 area is where you could have initiated a short position even before the weekly chart breaks down. Let's take a look at the last one. Here is USB, and the purpose of this video again is to show you that you can narrow down on your entry based on the RSI uniformity principle. You can see here backtest level there, coming back and giving us double top resistance on that line. Resistance, double top on that line, which meant that somewhere around here in the, let's call it lower 40s, was a sell signal. Also rejection here at a declining 50-day moving average was another sell signal if you're wanting to find another reason to go short. And also we can see that an obvious break coming in 2016 there, and you can see uniform activity rejection at the 50 line and also on the red line. So double resistance on the red line, number one. Number two, rejection at the 50 RSI level on the daily gave you a reason to be short around here, even before the current price is somewhere around here. So yes, once you figure out where the direction is going, you can use the uniformity principle, which I have to be very honest with you, it is perhaps my most important technical indicator. Now this is something I started using over the last 5 years or so. I'm still perfecting it, and I think the more I use it over the last couple of years, and the more I continue to use it and learn a little bit more about what the RSI is doing, the more I realize it is perhaps the best setup. I mean, I don't know of any other way of finding these standpoints in markets with some absolute precision. So yeah, sometimes it doesn't work, and yeah, sure, but generally speaking, it's a very powerful tool, this uniformity thing. Because here's the question: why is it that every time we see a turnaround, it is uniform action? And here's a perfect example: twice rejected, twice with uniform action above the red line and back below it, and also twice rejection at the 50 RSI level. Why the uniform action? Why do we see uniform action pretty much everywhere we look? Because I think there's something there. Eric Muathe, Muathe.com. Peace and blessings. I am out. Woo!